everybody. Welcome back to another episode of Venture Capital TV. My name is Sunny Mohanty. I'm the Regional Director of LATOKEN based here in Singapore, and I host VCTV. As all of you know today, Amit, Gary, and Alpesh, welcome back. Today we're going to talk about impact. Hi. We're going to talk about impact investments, ESG, and SDG. So yeah, I'd like you to explain me what the difference is to start off with. So yeah, that's very interesting. So let's have a quick round of intro about yourself, your fund, your investments, and then let's get on with the questions for the session today. I'm going to start with Amit. Hi, Amit. Welcome back. Quick round of intro and background for those of you who've just tuned in today for the first time and listening to you for the first time. Thank you.
Sure. Thank you, Sonny, and it's a pleasure to be on your channel. Look, my background really stems from a long stint in the CPG industry in brand marketing. So I spent about 14 years working for some of the largest CPG companies in the world in brand marketing, like I said. Post which I've been engaged in building a management consulting practice in 4 countries with a team of about 100 consultants that specializes in commercial expansion for companies in Australia and New Zealand. And much recently, during the pandemic, I'm engaged in building an impact fund, which is a venture capital fund that operates in areas of alternative proteins and alternative dairy food as a sector. So that's in a nutshell, sums of my 26 years of experience.
Wow. Okay, great. 26 years of experience. Amit, good to know about that. Thank you so much. And glad that you're here on this panel today. Okay, awesome. Alpesh, over to you. Welcome back. How is the weather over there?
Well, it's London. What do you think? It's May and it's bloody freezing. May is bloody freezing. I'm Alpesh Doshi. My background is in financial services and technology and data. I like emerging tech and building businesses around emerging tech. One of the areas we're working in at the moment is around sustainability data, which is really interesting. There's a lot of change going on in that space and a lot of opportunity. And you asked what ESG and SDG stood for: environmental and social and governance, and sustainable development goals. I hopefully, Sunny, you knew that. Hopefully, but that's what the thing. We can talk about what these things are as we go.
Yeah, sure. Yeah. Of course. Yeah, yes, that's correct, Alpesh. Exactly. So thank you so much for being a part of the show today. Really appreciate your attendance today. Very, very much needed for this panel today. Thank you so much, Alpesh and Amit. Last but not least, we have Gary. Hi, Gary. Good morning. How are you today? Gary, you are on mute.
I'm better now that I'm not muted. Great to be here. My name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 companies, 2 unicorns, original management team, Click Software, sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company that I co-founded a little over 5 years ago with Dr. David Yang in California, in Silicon Valley. I love artificial intelligence, quantum, and of course, having an impact on the planet is really important for all of us. As a population of the planet, it's going to go from 8 billion to 13 billion by the end of this century. So I am the CEO, co-founder, and president of GSD Get Shit Done Venture Studios, premier AI and quantum venture studio located in Santa Clara, California. We curate companies from around the world and help those companies to go global. And to become unicorns, using Silicon Valley as a port to the rest of the world.
Wow, perfect. And I see your roadshow happening. I saw on my Facebook profile from Vandana. You're touring. You're doing like a Shark Tank thingy in India, right?
What's that?
Are you doing a competition sort of thing?
Yeah, absolutely. I mean, we're doing that all over the world. We're doing it in Africa. Actually, I got to tell you, we're finding incredible companies. It's not just about make a dent in the universe. There's some incredible business opportunities that are, untapped all over the world, and it's a matter of going out. I feel like the Indiana Jones of startups.
Oh, Indiana. Oh, that's amazing. That's
Yeah, it's interesting.
Interesting. Hi, everyone. Hello. Yes, we got somebody wishing us hi. Hello. Welcome to VCTV. Okay. All right. Let's just talk about the topic today. So what's, again, understanding the Alpesh and just said, understand the difference between impact, ESG, and SDG, because these three terms, if for a person who is outside the space, looks the same. Like, for me, if I didn't do any reading or research on this particular three sort of words, I would imagine it's all the same, but that is a difference, right? What's the difference?
Look, I think everybody's got a way to see that. I mean, I'm going to kind of articulate my views. So I think as impact investment stands, it's a broader subject. And some of those SDGs, which are very popularly kind of used because of United Nations, it's a United Nations charter. There are 17 sustainable development goals that fall under that charter. And each of those areas basically create an impact. And as you understand ESG, which is the first word of environmental, so if you look at the SDGs, there are a lot of these goals that fall under environmental impact. There are a lot of these goals that fall under the social impact. And as far as the governance in ESG is concerned, I mean, we as a fund like to see that as more of a measurement mechanics. So it's just not enough talking about that I'm making an impact, but how much of an impact are you making in the areas that you're claiming that you're making, and how you're reporting that impact, how you're measuring that impact and articulating that. Governance falls under that category. So as a fund, we use things like the global reporting initiatives, the sustainable accounting standards, and many, many other frameworks. There are hundreds and hundreds of frameworks to measure impact. So that's how I look at impact as an overall theme, housed with the sustainable development goals. And further, if you want to kind of break sustainable development goals into broad categories, so it's environmental, social, and governance. So that's how we look at it from a fund perspective.
Okay, great. So we have the broad impact investments, then we have ESG and SDG, right? Thank you, Amit. Thank you for explaining that nicely, so well. Alpesh, yeah, over to you, please. Alpesh, again, you are mute.
Sorry, I have to hear that at least once a day, and it's now twice today I've heard that. Sorry, remind me what you want me to focus on.
I think you just mentioned in your introductions, while we're taking your introductions, you said that difference between...
Yeah, I mean, obviously knows, your work, impact and sustainability is a huge, huge area. Ultimately, we're all talking about net zero. We're talking about saving the environment. I mean, that's what it boils down to. And being a lot more eco-friendly is absolutely what you're talking about. The subject is so wide. It's, for example, doing farming better, reducing meat consumption. One of the areas that we're working in is around energy efficiency in buildings. So 40% of all emissions today come from real estate. So reducing the energy consumption of a real estate asset is actually quite a large part. So if you could figure out ways of collecting the data, manage the building, reduce the energy footprint of a real estate asset, that will be a significant contribution to the reduction of carbon emissions in the world. So there's and then if we take things like sustainable supply chains, so in the fashion industry there's a whole bunch of stuff going on around reducing one-use materials and having what's called a circular economy. So you have circular where you recycle everything. So a lot of the big industrial companies, like, I mean, you name it, all the or washing machine manufacturers and all of those guys, they're all thinking about the circular economy, which is, how do you recycle everything? If you make a washing machine and you sell it to a customer, how do we take everything that's in that washing machine and recycle it all? So there's no waste and there's no source of new materials from the environment. If you talk about metals or whatever. So there's so many different aspects of the whole idea around SDGs and ESG. One important one, obviously, is one of the SDG goals is around reducing poverty. So how do you reduce poverty in the world? And that's one of the big elements of the SDG goals. One of the 17 is to reduce poverty. So it's not only about technology, it's not only about climate change, it's also about social improvement and creating a more equal and a more a society where everybody has equal opportunity. So
yes, so that's the difference. That's a key difference as well. Thank you so much, Alpesh, for highlighting that. Gary, over to you, please.
Yeah, we've gone down through a lot of it. I don't want to rehash it, but the net is we've got a lot of challenges on this planet. As I've said, the population of the planet's going to go from 8 billion to 13 billion by the end of this century. And so if you look at it, we've got challenges. How are we going to produce the right amount of food during that period of time? How do we do the right thing? We've got rising populations. Africa's at 1.2 billion and growing dramatically. At the same time, we've got challenges with global warming because we haven't been good actors in the past and taking care of our environment. We've polluted. We've got the carbon emissions, and it takes anywhere from 20 to 30 years from what we do really impact and change something in the future. So, look at global warming. I mean, if you look at it now, in the next 50 years, there are areas of the planet that are going to be underwater. I mean, just in Florida, the sea level could be up 2 feet, anywhere from 2 to 7 feet by the end of the century, and what kind of impacts that going to have. I remember a few years ago, I had a chance to work with Dr. Irving Crick. Crick is one of the first private meteorologists. He actually started the meteorology department at Caltech. When I worked with him, he was in his 80s, and he was a student of Einstein at Princeton, that kind of guy. I met him in the 90s. I remember Dr. Crick was talking to me about what the impact of global warming was going to have on the planet. And I worked with him for about 8 months on a startup. And one of the things he told me is, he said, the food chain, the Gulf Stream is going to slow down, and it's going to affect the supply. There won't be as many fish. You're going to see snow in the UK, and he was talking about that. And I remember at the time I said, well, why is that? Because the Gulf Stream slows down. You're going to see bread baskets in Canada and Russia. You're going to see as the temperatures rise. So what we got to do is we got a lot of pieces coming at us all at one time. Population increases. How do we do the right thing? At the same time, we've got, the Zoom and the StreamYards to democratize opportunities around the world. And as we're doing right now in Africa, we see incredible opportunities. And another thing is, one thing about creating jobs, but you want to create jobs that are not only sustainable, but environmentally friendly. And so we've got it's not just about the money, it's about how do we help the planet survive and make our world a little bit better, a little dent in the universe. And that's really where we're focused too. I mean, we're looking at, so everything from female entrepreneurs, the Black community we work with. We have one of the board members of the NAACP is on our board, which is a top Black organization in the US. And, doing the right thing, female board members, minorities involved, that kind of thing. So, but it's about having a conscious decision. And, the SDG goals are set by the United Nations. Companies are now being rated on how good they are, what kind of things that they're doing, and whether or not, and especially with, investors like my daughter, who's a millennial. I mean, they're looking at companies like that, they have an entirely different viewpoint. I got to tell you, entirely different viewpoint of what a company is.
Oh, wow. I'd love to know what kind of viewpoint does she have? Because impact investments, to be honest, I think has picked up because of the pandemic a lot. We see a lot of impact funds getting created everywhere, every country, every government is supporting that as well. So how did it hit the millennials, and why is she interested? How does she look at it?
I mean, they're like have a different view on life. I mean, they're kind of like, they want to live life and enjoy life. At the same time, they don't like all the, and they kind of group on. I mean, they come together, they do things, they invest, and and they can change things because they're so connected. They know how to use the technology to focus on certain areas. So how are they different? I mean, they're really attuned to companies that are environmentally friendly, companies that are doing the right thing. They're looking at justice, and where there's social justice and they put those above making money. It's just interesting. I mean, of course, they're like concert musicians in terms of using the internet and things to be able to extract information, because their whole life, that's all they've done. I mean, they know how to use the technology.
That's great. That's a very good news. Yeah. Sorry, Gary.
Yeah, it's interesting. And I just, she's a special case because she works in AI with one of the large companies. But it's just incredible. I mean, the entire generation is a lot different. And it's not just about making, each one of the generations of baby boomers, millennials, Gen Z, they've all had different values and ideas. And this generation is a little bit better. They understand that, during their generation, global warming is going to have a huge impact. I mean, there'll be cities in India that are underwater, right? Coastal cities, because of this. And so, and we got them, we're a small planet in this large, there's 6 billion Earth-like planets in the galaxy, 200 trillion galaxies in the universe. At some point in time, another 100 years after 200 years from now, what's going to happen? If the population's 13 billion and it doubles again, where are people going to live and how's there enough food? So there's some, and during my generation, we didn't have to worry about whether food was going to be a challenge. But by 2050, with the population going to 9 billion, we're going to have to double the food, the current food levels in order to be able to sustain the planet. And so how do we do that? And so those are the kind of challenges. It's when we, as I grew up, we didn't have to think about that. But now the situation has become real.
Absolutely. I think that's a great point. Millennials picking up on these investments, impact investments, says a lot about what's coming next. Thank you so much, Gary, for bringing the case up. Very interesting as well. Thank you. Okay, great. Talking about. Okay, we have the investment, but talking about data analytics. So, how do you realize the practicalities of a ESG investment? So, do we have any data available to be able to measure it? Because it's very important. So, we talk about impact, but how do you measure impact? So, do we have data for that, Amit?
So there are 2 points on that. I mean, if you're looking at data in terms of how much is going towards impact investment as a overarching theme, yes, probably I think Singapore, Temasek published a report where they saw investments in that area go from 40 billion to about 80 billion during the pandemic, and they are hoping to take it up to about 150 billion. Now, in scheme of things, it sounds very big, but when you look at the overall investment climate world globally, it's still a fraction, number one. In terms of how much these impact investments are making impact,
yes.
To be very honest, there is no accurate framework that measures it. I mean, there's a lot of tools available out there, don't get me wrong, but even the biggest companies like the PepsiCos of the world and the Cokes of the world and the Unilevers of the world don't have an accurate metrics to measure it. So some people talk about carbon offsets, other talks about reducing greenhouse gas emissions by the kind of things that they're doing. Some people say that we've kind of gone in and created equal employment opportunity on the social level by X% and Y%. But if you really, ask me, my personal opinion on that, there is no accurate measurement that exists as yet to kind of really understand how much of that change are we really measuring. There's a vague, these frameworks give you an overarching, vague kind of analysis of the data. And yes, you can claim that I've reduced 3%, I've reduced 2.5%, I've reduced 1.5%, I've done X, I've done Y. But to me, all that is not very, very accurate. So we are yet to kind of really embark.
Is it a setback then, if you do not have the data?
No, absolutely not. No, absolutely not. I think, as impact in its entirety, the fact that people are trying to create an impact, the fact that people are channeling investments towards some of these very specified areas is a very positive move and a fantastic move. And building on some of the points Gary said, I think, the current generation, I like to kind of consider myself as a millennial, yes, is thinking about those areas which our parents never, our grandparents never thought about, because those are not the challenges they were facing. So we are facing these challenges. So, for example, like Gary said, by 2050, the population of the world is going to kind of reach a limit where food's going to be very difficult given the fact how much land we have for agriculture. And that's where some of the work my fund is doing in areas of alt proteins and alt dairy, and even talking about aspects of cell-based meat, where you can grow meat in a lab and mass produce it, and kind of take the pressure of the land, because the real idea is to take the pressure of the land. When you take the pressure of the land, you contribute to better environment and safer environment. So those are aspects we are seeing happen in the food area. So you're growing food in factories, you're mass producing, you're using artificial intelligence technology, whether it's vertical farming, hydroponics, aquaponics, cell-based meat, algae, fermentation. I can go on and on about 100 topics that I'm involved with. But look, the overarching theme is to get pressure on land, and everybody has their own metrics to measure it. So a very simple calculation I'll tell you, it will help you understand that if I sell 100 kgs of plant protein, right? So that's kind of going to have an impact on that. I saved, let's say, 10 kgs of animal protein. So I'm just giving you a very simple example. So it could be actually the numbers are much higher than that. So that would probably kind of tell me that I basically got 2 cows or 3 cows or 10 pigs or 20 chickens off the food chain. So as you multiply that number in terms of how much plant protein you're selling, that contributes to how many livestock that you've taken out of the food channel. And everybody knows how much one single livestock produces methane gas emission that contributes to greenhouse gas emissions, and multiply that by the number of cattle that you've taken off the food chain, and gives you a very rough and a very back of the paper napkin calculation that, look, this is the kind of impact your small venture or a single company is having. So a lot of people are doing that, through different frameworks and tools, but the real honest answer is there is no accurate measurement framework as yet.
I think that's a great use case that you've shared in terms of plant-based protein supplements, right? But is it, so just in addition to that, I think we discussed this on another episode as well. So why is it not getting popular the way it should be now? But still India, if you know, I mean, still there are many places where people still slaughter and they would just, pollute the...
Look, I mean, you're basically talking about change. And when you try to drive change in anything in the world, I think it's not as rapid a process that you'd want it to be, ideally. So I think change takes a lot of time. It gives way to resistance. And you're talking about changing habits. So somebody from eating chicken or mutton or pork or fish, you want to tell them tomorrow that, no, look, you're not going to kind of eat this because it's not healthy, and you're going to kind of start eating. So there's something called taste buds and taste palate. It doesn't change overnight. You've got to gradually build it. And one of the very simple examples to understand that is we coming from India I grew up in New Delhi, and I'm a hardcore North Delhi as it gets. So for me, when I kind of, for the first time in life, relocated overseas, aspects like Japanese food, teppanyaki, sushi, that absolutely like an alien world to me. And it took me a number of years to kind of really build my taste palette to be able to kind of adapt to that kind of food and be a global citizen. And similarly, when my journey started from being a vegetarian, so I gave up non-vegetarian, I became a vegetarian and finally became a vegan. So that entire journey has been a 10 to 11 year journey where I've kind of adapted and trained my taste palette to kind of eat a certain way, live a certain life. So I think change takes time. You're looking at the plant-based world just come about in the last 4 to 5 years in terms of its traction. I think you're going to see some amazing positive moves. As far as India is concerned, and I have these debates a lot of times with people, look, predominantly 70% of India is vegetarian. So let's get that out of the way, that we as a country don't consume so much of animal protein as some of the Western countries do in terms of our diet. If you look at elements of Indian diet, I would say very, very confidently that 70% of Indian diet is anyway plant-based. There is nothing not plant-based about roti, dal, and sabzi, or rice. That's all plant, right? Even the spices you cook with. As far as yogurt and milk is concerned, which is a very integral part, like clarified butter, milk, and cottage cheese is a very integral part of Indian diet, Indian culture, and Indian religion. Now that's going to kind of get some kind of a drawback going forward. It's not going to happen overnight. But the millennials and the generation, these are driving this in a big way, obviously influenced by what's happening in the West. And a lot of that influence is coming into India, and there are people who are getting up talking about lactose intolerance. Like, I'm having this debate with this very exciting venture in China that's managed to use peanuts to create alternative chicken. So they're using peanuts and the protein from peanuts to create chicken.
Yeah.
This is fabulous. And they've got a patent on it. So when I was speaking to them, one of the first questions I asked them that, don't you worry about peanut allergies? Because nut allergies is so big.
Yeah.
And the research said North and Southeast Asia. I mean, you're talking about the Western countries, but when you look at Southeast Asia as a region, you don't have that kind of allergies that the Western world has. So, these are some examples about what's really happening in terms of the change and the shift. So is it going to shift the way we think in terms of the speed? Probably not. But is it moving towards a very positive direction and people are making the right noises? Absolutely it is. So I don't have any misgivings or mis-expectations about the fact that this is going to change. The whole plan is going to be 30% or 40% plant-based in 6 years. Probably even in the next 40 years, it's not going to be 40% plant-based. So, we kind of work according, realizing our expectations and putting it on a realistic platform. So, yeah.
Thank you, Amit, for sharing those insights with us. Really, really helpful. Okay, we have Fabio who just joined us. Hi, Fabio. How are you?
I'm fine, Sonny. Sorry for being late. A late minute emergency, but I hope to contribute to this discussion. With I recognize some people I already discussed with. Gary, in particular, is a friend now, and I'm now quite involved in impact investment. I'm raising funds for an initiative, a fund which will be called Smart Investment, Smart Impact Investment, and it will be based in Luxembourg. And we already have designed a strategy which encompasses the key sectors from inclusion, gender equality, decarbonization, renewable energies, governance, and so on and so forth.
Wow, that's a great news that you're creating a fund, impact fund. So yeah, I'm going to come back to you with the question. Let's just go with Alpesh with the same question. So yeah, how do you realize practicalities of ESG investment? So again, do you think, is that data available to measure impact?
Yes, I mean, there are several metrics that have been proposed from the United Nations program to the Millennial Goals program to the GIIN, which is a platform for impact investment. Until not too long ago, each fund tended to design its own metrics. Now they seem to be converging towards these 3 or 4 international standards with some addition of tweaking by individual funds, and that's what we would that's the approach we would like to take. But essentially, I don't know, for environmental investment, there are easy metrics such as for renewable energies, for example, the number of kilowatt hour produced through renewable sources. That's a metric. You can use the number of CO2 tons saved for other investments, which is also, it's a little bit more difficult metric to calculate exactly, but it gives you a fairly good approximation. For example, when you talk about governance, you might be on shaky ground. But for example, when you invest in a company, you can, for example, target the number of female employees, the number of female managers promoted, the number of independent board members, the number of best practices adopted, for example, in the human resources department, 360, yearly checkup on the staff and on managers. For example, whether the company secretary is, has all the right background, has taken courses, has been, following the latest development in his profession, and so on and so forth. So, overall, I would say that a number of metrics are natural, already exist, are variables or phenomena that can be measured rather accurately. Others can provide a quite good approximation, and you, for example, can design specific metrics for particular investors. For example, in Italy, the brain drain is a key social concern. Okay, so you can target the number of Italian professionals which are attracted back to Italy after an international career. This is a metric that is non-standard. You won't find it in, the most widely adopted criteria methodology. But, for example, for some foundations, it is a key element of their investment process.
Right, sure. Thank you, Fabio, for that, for those insights. Again, coming to Alpesh, so is there data to measure impact, ESG investment and impact?
It's a complicated problem, right? Amit sort of mentioned some of the things, the challenges that every sector, every vertical market has to have the ability for accurate data. So one of the sort of basics is, if you can't measure it, how are you going to prove that you're on net zero? Really, it's about real measurement, right? And in the financial markets, in Europe anyway, I don't know what it's like in Asia, but in Europe, we're reasonably ahead of the game in terms of actual financial reporting around measuring the impact, measuring your sustainability. So there's regulations like TCFD and SFDR and a bunch of other ones, which basically a company has to, a large listed company has to actually publish their sustainability reporting. However, the data is all over the place. They don't really have the data to do it. So as a real example, I was talking to one of the top, someone in the innovation team at one of the largest, one of the top 4 American banks yesterday. And they're trying to figure out across the bank, and they've got 200,000 people, right? They're trying to figure out, how do we measure ESG, and how are clients going to measure ESG, because it impacts us and it impacts our clients. And how do we then create products and services so that we can take the sustainability factor and ESG factor into account on new products and services we provide. So the opportunities are huge around data, but the data is really either lacking or not accurate or incomplete or just not available. So there's a lot of, if you're talking about businesses and entrepreneurial, it's absolutely a huge opportunity for entrepreneurs to build businesses around this area.
Great points. Thank you so much, Alpesh, for that. Gary, over to you, please.
Yeah, so you're right on target. So a lot of it is difficult to measure. There are companies out there that look at each one of the companies and set up services. There's one called Calvert that look at a company's goals and whether or not their impact or not. It is a challenge, but part of it is looking at the charter, the company themselves, and what their stated goals are, and then what have they really done? What have they executed to that environment? Again, we're working with the Black urban community. We're creating a $100 million impact fund in the U.S. and it's how do you measure it? It's what cities are you involved in? How many people have participated in a particular program? What are the results of that? So it's a lot of it's through that. It is difficult, but the challenge is there's some with from a carbon standpoint we can actually measure it directly. There are hard facts, but some of it's kind of soft when you talk about social, right? So, but the intent has to be there. We've never stated those goals before, and I can tell you, I worked with one of the board members of Philips. And Philips has renewable energy. They have, especially in Africa, have some stated goals, but they're putting their money where their mouth is, and they're on the ground working with companies, working with individuals, working with countries to be able to help those goals move forward. So the other thing is, do they have on their boards, do they have people like Philips that are actually minorities or focused on the impact side of the business and regularly participate in those board meetings? So it's not a simple problem. This is a very complex problem because it spans so many different things, from social to environmental. I mean, it's many, many things. So it's not a simple issue, but the situation is, are we really moving in that direction or not? Are they having an impact and have initiatives in that direction or not? How much money are they putting behind it? So if you look at the kind of money that they've allocated for those initiatives, that starts to drive whether or not they are going to have a potential impact. But the good news is many companies around the world, including, with the United Nations, have defined what it's supposed to look like. And so the good news, we know where to go. It's just a matter of how do we get there.
Absolutely. Thank you so much, Gary, for that. Thank you so much, Gary, Fabio, Amit, and Krish. So we discussed about how to measure impact, and obviously you've shared your insights. How about, is impact investment always profitable? So is profitability a key factor when it comes to impact investments?
Absolutely. I think when you talk about the word investment, you got to talk about profitability. There's no charity going on out here, and charities can't sustain. A company needs to be economically viable to even keep the sustenance goal going. So if your goal is to create impact, then the company has to be viable enough to keep creating that impact. So economic viability is huge. Your question whether impact investment can lead to profitability, I can only speak for myself and the areas that we invest in. Absolutely bang on. I mean, during the pandemic, alt proteins and alt dairy have seen 150 to 200% month-on-month growth. As more consumers across the world look at a more sustainable form of living, and obviously nutrition and food and well-being are huge parts of that, I think the demand for alternative to dairy, demand for alternative to meat, demand for alternative food cuisines is just going through the roof. I mean, I'm not going to name the usual Beyond Impossible and Oatly because it's kind of cliche, everybody's naming it. But some of the smaller ventures that people haven't even heard about are reporting 70 to 80% month-on-month growth. Now, we spoke to a venture last year to evaluate, and their turnover was barely $120,000, or so, something like that. Today, they're doing over $1 million sales, because of the demand that the pandemic has what the pandemic has really accentuated, the need to live more sustainably. Now, whatever that sustainability might mean for different people, food is at one end, the way you live is your second end, the amount of energy that you're consuming is on the third end, recycling and being more sustainable with the products that you use are the fourth end. So depending on what you're kind of looking at, people are trying to get more sustainable in the best way they can, and food is a huge part of that. So I would say very, very kind of confidently that in my sector, we are breaking through ceilings that is unthinkable in the times that we're living in. Absolutely performing, overperforming, overperforming every index that you can think of in the plant-based. Not everybody, but the companies that really matter.
And the plant-based, that's good to know. I think I should be looking into that space as well. There's a huge potential. I think thank you so much. Alpesh?
Hello.
Yeah, so profitability and impact investing. And do they go together?
Absolutely. It has to be, yeah. It has to be profitable. Yes, there are lots of different things you still it doesn't have to be all about profit. But I think, if you talk about companies and corporates, they have to be profitable and they have to be green. If you look at all the new startups that have emerged on the basis of being sustainable, there's huge numbers of companies. Look, if we just take Impossible, the burger company, as an example, right? Okay, by the nature of what they're doing, they're reducing the consumption of beef, right? So that's good on its own. But they're a profitable company. They're a profitable company. They're listed on an exchange. They are helping the environment, right? So I don't think there's a mismatch between profitability and sustainability. Part of it has to be, we're changing society basically on where money is made, and sustainable business is something which can be profitable and it should be profitable. It's not one or the other. I don't think there's a conflict. I think people are still trying to figure out where the profitability will come and how the profitability come, and also the scale of it, right? It may be different. It may not be 10, 15, 20, 50 times return on a VC investment. I don't know. I'm not saying it is or it isn't. I'm just saying it might be different. Might only get 10 times your money back, not 50 times your money back. But the point is that it is absolutely, it drives our economies, right? Profitable businesses drive economies, and that's something that investors want to see. Investors want to invest in companies which are going to be profitable, and this is a huge wave of change where we're at the nascent stage of creating these new businesses which are sustainable. So for example, in the fashion industry, I'm not actually anything. I have no real interest in fashion, but there's a bunch of new fashion brands that are emerging, are all sustainable. Yeah, existing fashion brands are going to, frankly, unless they absolutely change, these new sustainable fashion brands are going to replace them. They're going to replace them eventually, because people will just not buy non-sustainable clothing. They just won't do it. So therefore, and it is profitable. So therefore, I think it's a change in nature around impact on what kind of businesses get funded, and those kinds of businesses will be profitable because there's a growing demand. It's a growing demand, which is fantastic.
Yeah. Absolutely, that's a great point as well, Amit and Alpesh. I mean, obviously, profitability is the key. But why? If you go into start researching about impact investing, this topic always comes up: profitability and impact investing. Is it because back in the days, impact investments were not considered to be profitable? They were just considered to create an impact to the society. And has the mindset changed over the years, Gary?
Yeah. So, do you want me to talk about that, or do you want me to talk about profitability?
You can talk about both if you wish to.
Oh, thank you very much. I'm not worthy. So, so what we look at is when we're working. So, for instance, when we're working with Africa and African startups, it's not about entitlement. Of course, we help. Many times, what we'll do is we'll help with some type of scholarships to help. But at the same time, these are incredible technologies that have the opportunity to create great businesses. And so it is about the profitability. It won't continue if there's not some profitability, if it's not a real business to create. So we got to figure out how to be able to do that, because entitlement programs just don't work. Nothing good happens, right? don't teach people to be successful and to be businesslike if it's all about entitlement, from my perspective. So what we do is we actually look for companies every time. We look for opportunities where we can create some interesting businesses. We call it jump starting when we come in and get it started and help them. But at the same time, we're looking for the opportunity, in our case, to create some additional unicorns. So some of the companies, I mean, we found companies in Africa that have started 6 months ago that already have almost $1 million in MRR and growing. So imagine, started 6 months ago and already at almost $1 million worth of MRR. I mean, incredible companies. So it's finding those companies and really nurture them. Many times they don't have an outlet to the rest of the world. From my standpoint, these are social impact companies, and they don't have a way to be able to get their product or service out to the markets. They're really isolated in a particular region, not just in Africa, everywhere. And so the key is, how do you get that out to the market so they can get the real value, et cetera? That's where they start to become a real business. That's where they start to become really interesting. And so that's the opportunity. I mean, it's like with VCTV today, mining those and connecting the dots with those opportunities around the world and giving them a voice to the rest of the world.
I think nicely explained, Gary, again. Thank you so much for that. Thank you so much for explaining that so nicely. So I have Fabiana back on the front stage. Hi, Fabio, over to you with the same question.
Unfortunately, I didn't hear the question because I was disconnected. So
I got distracted as well with the message.
Did you get that little note, ma'am? You looking? I don't know what that means. I think that one's for you, Sonny. It's Fabio, it's for you.
I got me distracted, sorry. All right, thank you so much. Whoever that is commented, really thank you for that. Okay, great. Fabio, the question is so profitability, all three of us here, like Gary, Alpesh, and Amit, just agree that yes, profitability is the key for big impact or any other investment when it comes to VC investments. So
yes.
would you like to add on to that what they've said?
I definitely, as Amit said, the profitability is the element that distinguishes impact investment or ESG, social responsible investment, from philanthropy or charity. So, and this can be interpreted in many ways. I will give you at least 3 ways in which this can be interpreted. It can be a trade-off between the ESG or impact investment metrics and the financial returns. So you're willing to give up, I don't know, 3, 4, 5 percentage points in targeted returns in exchange for certain targets on your ESG metrics. That can be one way. So you lose on financial returns, you gain on social benefits. Another way to interpret this could be, okay, I will follow a decision tree. My first line of my first decision element will be the return. That is, I target, let's say, 10% returns. So I select all the investments which comply with this hurdle. And then as a second step, I will select among the, I don't know, 100 proposals or 100 opportunities I have, those with the highest ESG performance, expected performance. Okay? That's a second way of interpreting trade-off. The third one is inverted. I look at first the ESG targets. So I want to reach certain objectives in terms of societal benefits and improvement in the livelihoods of people. And then once I have selected those that comply with my target, within that set, I will go and select those with the highest return. So as you see, the investment strategy can adopt different ways, different approaches, and you have to be how can I say transparent vis-a-vis the investors, vis-a-vis the public at large, on what kind of selection of portfolio selection approach you follow.
Right. Really like that decision tree that you explained. Thank you so much, Fabio, for explaining that as well. Great. So we are almost end of the show. Let's take some closing remarks. And what advice do you have for investors, who are looking to invest into an impact fund? B, and what's your advice for startups who are going to start a business, probably, or looking for further rounds of investments from impact investors? And let's just wrap up the show. Amit, over to you.
I think for people trying to invest in impact funds, you've got to first understand that what are the areas of impact that you want to drive, and understanding of those areas is very important. You can't claim that I'm going to change the whole world. So you've got to pick up the topics that are close to your heart and which you have a bit of understanding on, and then kind of invest. But like Fabio says, like Alpesh says, and probably Gary would agree, that the decision to invest or not to invest in a fund or a venture really comes down to how sustainable the venture is from a perspective of profitability and growth. Because if you can't sustain the venture economically, there is only that much impact that you can drive. The venture fails and the impact stops. So to have a continuous drive of impact, the business has got to make money, and that money has got to channelize in impact. Of course, among the other kind of aspects of maximizing shareholders' wealth, and I don't want to kind of go into those historic metrics. As far as startups are concerned, look, the same advice. You got to pick a topic that you're really passionate about in terms of driving impact, whatever that might be. And then kind of understand that how am I going to make my venture profitable? Because if you can't demonstrate profitability, then it's not a venture. Then like Fabio says, it's either a philanthropic exercise or a charity or a social enterprise. So if it's a quintessential venture that's trying to get investment in, profit is what's going to dictate whether they get investment or not. So select a topic that you are really passionate about in terms of impact, and kind of understand how you see your venture being profitable and driving that topic. That's all I kind of have advice for startups.
Just a quick one. Because I just want to know what made you just invest into food-based supplements, like food alternative supplements to animal protein. I mean, you are into that space. Yeah. Is it a particular reason that drove you to be just focusing on that?
Two reasons really. Number one, the biggest reason is I've got functional experience. So, we were just talking before the show, sector agnostic versus sector focused. Now, you meet a lot of VC funds that say that we are sector agnostic. Now, we are sector focused, we're not agnostic. And it comes from the whole idea that I've built food businesses all my life. So the CPG brands that I've worked for 14 years in my previous career to becoming an entrepreneur has been driving food brands and beverage brands in over 15 countries. After which, when I started my management consulting practice, I saw myself driving 400 Australian, New Zealand brands in 16 countries and building strategies to kind of drive the commercial success of those brands. And most of them were in the food and beverage. So to answer that question, my first point is I've got 26 years of functional expertise, international relations, market understanding of the food and beverage industry. Now, building point 1A, I myself turned vegan. I've been following this space for about 6-7 years. I believe in sustainability as an aspect. I'm very passionate about, aspects like cruelty on animals and things like that. And point number 2, why I really took on this cause, which is the second mandate of my fund, which is driving equal employment opportunity and gender equality. And we are trying to achieve that by bootstrapping within businesses, is I spent, I think, enough time in a country which is New Zealand and led by Helen Clark as well as Jacinda now. And I think women leadership and what that country could achieve and where it's kind of in the world and how it's looked at, I think was a huge aspect of my kind of turning my vision into bootstrapping women businesses and driving that as an area. But there's a little bit of a personal story there as well. I've, kind of been a single parent child. My mom and my aunt and my grandmother are responsible for raising me. I lost my father when I was very young. And I'd like to believe that those women did a fine job in raising a man. So I think that, coupled with my experience of living in New Zealand and seeing what women leaders are capable of achieving, I think was the second reason that I got into what I am doing today. So these are the two broad reasons, yeah.
Thank you. I remember that. Thank you, Amit, for sharing that with our speakers and audience.
Sure.
Alpesh, over to you, please.
Tell me what we're talking about.
Closing remarks.
I think the sustainability stuff is an exciting space. For me, I didn't mention I'm a vegetarian. I've been a vegetarian all my life. So, and I'm trying to get to be vegan, but it's pretty hard, to be honest. But so for me, there's already that element of helping the planet, but also, it's very simple. Your kids and your kids are growing up in this world, right? You want the world to be around when they get older and they have children. So you look at it that way. It's that. From an investment perspective, there's such a vast amount of opportunity, and the world will change significantly around sustainability and ESG. The next generation of businesses are just going to refactor almost every industry. It works in food. Just imagine how food is going to be farmed and used and consumed. It's completely going to change. So, if you're an entrepreneur in the sector, look at what what areas and find the sustainable element to that. So that for me is a sort of simple message. And you can find me on LinkedIn. My name is there. Just let me know where you heard me, saw me, and obviously what you'd like to discuss. On Twitter, I'm at Alpesh Doshi. And look forward to next time. Thanks a lot, Sunny.
Thank you, Alpesh. And they can obviously find you on VCTV as well. Thank you. Gary, your closing remarks, thoughts for the
Amit said something that's right on point. For the investors, you got to lead with your heart. And I remember a long time ago, I had the CEO of a company many years ago tell me you got to do the right thing. So whatever you deem is right. We're looking at social impact is really important. We believe that creating jobs, getting people out of poverty by giving them access to the global markets is really important. So that's really where we're focused. I've focused on female entrepreneurs. Like I said, we've done scholarships for founders that want to come into programs that we have to help. Half of my classes that I did in Russia, I had female entrepreneurs, and we helped fund them. In fact, we had the first Black Russian female entrepreneur that came in and extremely successful. Father's a businessman from Angola, but extremely successful. So, doing the right thing is important. We got to make a dent in the universe. We got a lot of challenges on this planet. We got population, we got climate, we got inequality. We got to go down through and put our stake in the ground and try to help. So stay focused. For the companies out there, look at one particular area, focus on it, and make your own dent in the universe. You can reach me, Gary Fowler, on LinkedIn or Twitter. I'd be happy to talk. But companies that are out there, there's an opportunity in the market. Stay positive, stay optimistic, and visualize where you want to go.
Fantastic. Thank you, Gary, so much for those lovely words as well. Next, we have Fabio. Hi, Fabio. You there? Fabio, can you hear me? Okay. I don't know if you can.
It looks like he has a connection problem, Sonny.
Oh, okay. Okay. It's okay. Sorry. Sorry, we can't hear you, Fabio. So let's just wrap up the show. Thank you so much for being part of this show, Amit, Alpesh, Fabio, and Gary, and sharing your insights. And I'll be back tomorrow. Till then, take care of yourself. Bye.